I just know somebody broke into my house.
Did they kick the door in? How did he get the door open? Do you know?
I don't know.
One woman's harrowing run-in not too long ago, not with a burglar, but what was turned out to be a J.P. Morgan henchman sent to change her locks.
Not knowing who was actually at my door or how many people or if the person had a gun, a knife, a sex offender, I was just frightened to death. I would say that the banks are robbing American people in plain English.
That story just the tip of the iceberg when it comes to lenders trying to speed or fraudulently foreclose in this country. But why would the banks be so anxious to behave this way? And why would politicians in the Treasury Department allow them to do it? Take a look.
Most mortgages are backed by the government. In order for a bank to get that sort of backing, it must fit two criteria. One, borrowers must be verified by the banks and their agents as qualified. And two, the lenders must fill out paperwork accurately and make sure that when the home's title changes hands, so too does the documentation. But during the past 2 decades, a whole lot of the time, that never happened. Why is that? For the banks, the motive's simple: money. Banks profited by packaging and selling those toxic home loans, and then profited again by betting against those same securities. A bet, in essence, that a fraudulent loan they made wouldn't be paid back. But why would politicians allow this? The simple answer: to stay in office. Giving people houses makes them happier and makes local politicians more popular. At the same time, the financial services sector, the banks making all that money, were donating to the political campaigns. In 2008, the financial sector was the top donor to both Democratic and Republican candidates. So where are all these fraudulent loans now? Well, you own them at the Federal Reserve, Fannie Mae, and Freddie Mac. In order to cover it up, the banks and politicians will do whatever it takes to prevent a legitimate foreclosure proceeding, one that would easily reveal the lack of qualifications and bad documentations in the loans the banks have been selling and giving to the government for years. And finally, the last and most important why. Why isn't our government dealing with it now? Perhaps because that would reveal systematic criminal and civil fraud at the highest levels of America's banks and political corridors.
And we know who's fighting for the banks with all the money going to our politicians. Again, from the president on down the line, no one has given more money to all of our politicians in the financial services industry. Question is, who's fighting for everybody else? And joining us now is Jennifer Brunner, Ohio Secretary of State. She's launched an investigation into the specific foreclosure proceedings in her state. And Carl Denninger, author of The Market Ticker, who caught my attention today with his fiery open letter to California Democrats on this very topic. He is also one of the founders of the Tea Party movement, going back to this original issue a few years ago. Jennifer, I'll begin with you. Can you give us a sense of what you see as the problem on the foreclosure side right now in your own state?
Hi, Dylan. I'm Secretary of State of Ohio, and I license the notaries in my state who notarize documents, for instance, for some of the home finance companies, the banks that are processing these foreclosure documents. What we're seeing is, for instance, 8 notaries notarizing 18,000 documents a month, and hearing stories that the notary's filling in information in the document, handing it to the signer, who's actually named as an officer of multiple banks and signing multiple documents to create a chain of title or a list of owners, and then the notary handing it back to the signer signing it, and the notary notarizing it. I don't have the authority to actually revoke these notaries or to prosecute, so I sent it to the Justice Department in August to have them take a look at it.
And have you heard back from them?
I've been in some contact, and out of respect for the Justice Department, I said that I finally called in late September and said, am I allowed to say anything about the fact I've referred it to you, and I was given the go-ahead.
Okay. Listen, Carl, I want to read everybody a little bit of an excerpt of this letter you wrote today. Very powerful. You say, this is clear evidence that these securities, the core of all the foreclosure and housing mess, are fatally defective. You say there is no solution to this problem that is both lawful and yet preserves the fiction that all is well with this edifice. yet at the same time protects the chain of title and housing and the rights of both homeowners and securities buyers. It's almost as if you're saying we can keep the system we have, but then we have to forfeit our sense of property rights in this country, or if we want to reestablish property rights in this country, we have to deal with the fraud or the malpractice that is at the core of this. Is that a fair interpretation, Carl?
Yeah, that's essentially the problem. I mean, what's happened here, Dylan, is that these people at the inception of all of these loans knew they weren't any good. We now have this. It's been discussed in FCIC hearings, and yet these securities were packaged into these specific types of conduits. The problem is the IRS regulations say you have to convey the paperwork, and in addition to that, there are specific standards for the amount of non-performing assets or things that you could foreseeably see a default on that can go into these structures. You can't get there from here when 30 to 90% of these notes are found not to be in conformance, and that's the testimony that we've had over the last 6 months. So you can't go back and unbreak this egg. It's already happened. Humpty Dumpty fell off the wall. We now have either a bunch of these structures that were put together with defective instruments, or the instruments were never conveyed in the first place, and because the dates have passed where you can add things into these structures, there is no fix for this without violating the tax preference. I don't know how you solve this problem. The only thing I can come up with is force this bad paper back onto the originators, repay the MBS holders who bought these things thinking they were good securities and actually bought an empty box.
I'm going to interrupt you a little bit just because we're dealing with, I want to make sure that anybody who's watching this can understand what it is that you're saying. The point is that the people who bought a lot of these toxic securities was your pension fund, the teacher's pension fund, the judge's pension fund, the police and firefighters' pension fund. And those pension funds were sold these mortgages on the belief and verification, both from the ratings agencies, from the banks, and implicitly from the government, that those loans were good. And when we find out that the loans were not good through these foreclosure processes that they're trying to avoid, you either have to pay back the pension that you've raped, or you have to ignore it and continue to drive the system the way that it's being driven. But that doesn't seem to be politically viable much longer. If you look at this, Jennifer, how much longer can we avoid dealing with the core issue of banks making money by selling non-conforming loans to the government by the trillion, and then going forward betting on their collapse and then donating the profits to politicians who say it's okay?
Well, this was part of the reason why I made the referral to the Justice Department. I knew this was happening across state lines, and I also knew that the notary issue was really the tip of the iceberg, that when you start to look at how sloppy the banks have been at keeping their chains of title in line. I mean, they ask consumers and tell consumers they have to follow the letter of the contract between the bank and the consumer, whether it's a credit card or whether it's a home loan. At the very least, the bank should have to follow the letter of the law. In this case, I knew that we would find situations where there was not only sloppy notarization, but actual lapses and gaps that really leave the final person who's bringing the foreclosure action in a position where it may not even be good, and where clearly you've got a homeowner who may want to find out who really is the party in interest, or have an attorney for them look into predatory lending, and it's very difficult to even get to the bottom of that.
Yeah, Carl, if you were to look at the core issue here, which is that the savings of America was the piggy bank that this type of product was being sold to, that the savings of America, whether it's the New York State pension managers or any, I go down, we don't have to list all the various pensions, are the ones that got stuck with a lot of this paper, not to mention Fannie, Freddie, and now the Federal Reserve. If you were to look at that core issue, and then you were to look at the understandable anger, not just from the Tea Party, which I know is a constituency that you were catalytic to at its beginning, but across the entire political spectrum, why do you think we haven't seen the organized focus from the Tea Party on this issue in a way that is effective, and for that matter, an organized focus from anybody else who's pissed off, whether they're a Tea Party or not, on this issue? Why do you think it doesn't get addressed politically?
Well, Dylan, you just got to look at this from the standpoint, you don't present false documents if you have real ones, okay? So the reality is the real ones are gone. They were intentionally obscured. And if you start to look at this, what if we find out that of the $6 trillion of securities that are out there outstanding right now, half or more of them are defective? You put them back on the banks, and they all blow up. You know what? We have a resolution authority under Frank Dodd. How about if we use it?
Can I leave it right there? Because I would love to see them use it, especially if this is all fraud. Jennifer Brunner, Ohio Secretary of State, Carl Denninger, author of The Market Ticker. I hope you'll both come back, and I hope that the two of you remain as vigilant on this issue of the compromising of property rights in this country as I intend to. And if you're watching this program, please take the time to either rewatch this segment or, if you can't believe everything that you have just heard and you're interested in learning more about it or have the opportunity to reread it, to understand it. I understand it is technical. I advise you to check out not only the Market Ticker and Carl's open letter, but a blog that I posted today to the front page of the Huffington Post that explains just how deep-seated this problem is in this country, entitled Property Rights Gone Wrong. That now atop the Huffington Post. If the banks have stuck a bunch of fraudulent loans with the Federal Reserve, Fannie and Freddie, and are trying to cover it up with foreclosure fraud, well, please let us see the Justice Department do something to defend the American people as opposed to the largest banks in this country for a start.